China dropped a bombshell in the ongoing trade war with the United States. On April 11, 2025, Beijing announced a hefty 125% tariff on U.S. goods. This move comes as a retaliation against Washington's decision to raise tariffs on Chinese imports to 145%. The Chinese Ministry of Finance declared that American goods are no longer market viable in China due to these tariffs. This signals a potential end to the tit-for-tat tariff war that has plagued the global economy for years. China made it clear this would be its final retaliatory tariff action. This decision marks a significant escalation in the trade war. It also reflects China's growing confidence in its ability to weather the storm. China seems to be signaling its intent to move away from a dependence on the U.S. market. Instead, it is focusing on strengthening its domestic market and fostering regional trade partnerships. This bold move has sent shockwaves through the global trade system. The initial reaction in Asian markets was mixed. Japan's Nikkei index experienced a sharp decline of around 3%. South Korea's Kospi index also dipped by 0.5%. However, other markets showed more resilience. Taiwan's composite index saw a significant jump of around 3%. Hong Kong's Hang Seng index also rose by 1.3%. Mainland China experienced minor gains. European markets initially opened higher but quickly reversed course. They dipped into negative territory following the news of China's tariff hike. Similarly, U.S. futures also trended downwards, indicating a pessimistic outlook. Economic experts believe that this latest round of tariff increases could effectively bring U.S.-China trade to a standstill. Victor Gao, a prominent expert at the Center for China and Globalization, argues that these tariffs will make American goods prohibitively expensive for Chinese consumers. He believes that further tariff increases are meaningless in this context. While engaging in this trade war, China is also strategically strengthening its ties within the region. Finance and central bank officials from China, Japan, and South Korea convened recently. They discussed the potential impact of the escalating trade war on their economies. This signifies a united front against protectionist policies. In a move aimed at bolstering regional relationships, President Xi Jinping of China is scheduled to visit Vietnam, Malaysia, and Cambodia. This visit is crucial for several reasons. Firstly, it showcases China's commitment to its neighbors. Secondly, it aims to explore alternative trade routes and partnerships. Thirdly, it allows China to present itself as a reliable partner in a time of global uncertainty. This trip underlines China's strategic pivot towards its neighbors. Vietnam finds itself in a particularly delicate position. The Southeast Asian nation faces significant U.S. tariffs, currently at 46%. While Hanoi offered to eliminate tariffs on U.S. imports, it faces accusations of facilitating the circumvention of U.S. tariffs by Chinese goods. This has put Vietnam in a difficult position, forcing it to walk a tightrope between its economic interests with both the U.S. and China. The ongoing trade war and the recent tariff hikes signal a period of significant uncertainty for the global trade system. Analysts at ANZ predict that this ongoing trade policy volatility will have a negative impact on both global activity and investment. Businesses thrive on predictability, and the current climate of escalating tensions and unpredictable policy shifts creates a chilling effect on investment and growth. The future of global trade hinges on the actions of both the US and China. Whether they can find a way out of this deadlock remains to be seen. If you liked this video, please like, share, and subscribe to The Silent Observer for more daily updates.